Happy Friday, everyone. Jason Jacoby here with your closing bell for the week. Crazy week in the markets overall. Again, started the week off really strong, had some more of the relief rally that we had last week. And the last 2 days have been mixed and choppy due to earnings season and some big names, which we'll get to in a second, having a major fallout and underscoring some earnings pressure and underperformance. So let's get right into it, shall we? Highlights of the week. So we had earlier this week, I believe it was on Monday, we had the United Kingdom appoint, and specifically King Charles appoint the new Prime Minister, Rishi Sunak. A little background on Mr. Sunak here, or I guess Prime Minister Sunak now, is he was a former hedge fund manager, attended Stanford University, and investment banker as well. And just like the rest of the world, his speech was hopeful, yet also concerning just in terms of the global environment, where we're at now, where we're going. Just said there's a lot of painful work ahead that needs to get done, and it's not going to be easy. It's a very difficult landscape, but need to get inflation under control, need to bring back some sort of energy independence or work towards that, so they don't have to rely so heavily on Russian exports or Saudi Arabian exports or even American exports. Which we'll also get to in a second with our GDP numbers. But nice to say that he seems like a good fit, smart guy. Again, I really don't know much about United Kingdom politics, but from what I've seen and what I've read so far, seems like he could do a good job for their country. So moving on, Elon Musk closes the Twitter deal as of Friday. So we're recording as of Thursday afternoon, but as of Friday, it seems like the Twitter deal will be done as long as the banks loan him, I believe it's about $13 billion that he's going to need of the total 40 some odd billion dollars to buy the Twitter platform at the agreed upon price. So that should close tomorrow, but he said it's not going to be a free for all. It's not going to be just the allowance of hate speech and the spewing of false facts. It's not going to be just a crazy platform wherever anything goes. A free for all is what he said. So that's good to hear. There's going to be some rhyme and reason. People can share their opinions, which they can, rightfully so. We have American freedom of speech, which is very highly valued, and I think we've kind of lost that these days. But there'll be a method to the madness, especially Elon Musk, right? Another news, mortgage rates top 7% for the first time in 20 years. That's a big deal. Obviously, with the Fed hiking short-term interest rates, it's affected the not only our economy, but the global economy, import, exports, the US dollar, historic levels in terms of strength among the relativity to all the other currencies in the world. And so 7%, first time in 20 years, that's been that high. It's slowing down some of the consumer demand in the housing market. Obviously, there are different regions, different price points. There are certain markets that are faring better than others. I know our market's still pretty decent. I know houses don't stay on the market that long, but it's not really a seller's market anymore. It's kind of a buyer and seller's market, depending on the deals and the property and the contingencies, right? So something to watch there as the economy continues to slow down. But some sliver of good news today. So third quarter GDP number estimates have come out. The GDP, which is the gross domestic product, measures basically the growth of the economy as a whole, 2.6%, which is adjusted for inflation for quarter three. That's pretty darn good, considering just all of the political, geopolitical, inflation headwinds, rate headwinds that we've been seeing here so far this year. First two quarters obviously were negative, which is technically the definition of recession, negative GDP growth, but we've bounced out of that, mainly due to the oil and gas exports from the United States to Europe and beyond. To try to mitigate some of that Russian price pressure that Europe's feeling right now. But that's a majority of the reason why we had such strong GDP growth was the oil exports. Most probably a lot of our strategic reserves that we've been releasing have gone over there. but needless to say that it contributed to the economic expansion as well as consumer spending. So for most of you, for those of you that don't know, excuse me, not most of you, for those of you that don't know, consumer spending makes up a majority of the GDP numbers. GDP obviously was positive. The consumer, I mean, I'm sure you've gone out to restaurants to eat and shop, and people are still spending money, dipping obviously into their pandemic savings that they've saved. Again, remember, we saved more than during the pandemic than at any time in our history, which is saying something. So a lot of people are dipping into that. Also, I had mentioned this before in the previous closing bells and Boyer briefs, that there were over 260 million credit cards open in the first 2 quarters of the year, which is also concerning because people are starting to spend on credit. And with rising interest rates, right, it's a higher interest you're paying on your credit cards as well. So hopefully, we start seeing consumer spending slow down a little bit, to help with this inflation piece as well. That way the Fed doesn't keep hiking rates to terminal levels, and we'll get this thing fixed, right? That's the whole goal with the Fed there. And then another big news, market news today. So Facebook, Meta, remember they changed their name to Meta, down almost 25% today, 24 and change, 24% today, due to big earnings miss. So I kind of want to talk about what the major tech stocks have done this year, just in terms of relative to the market. Okay. So bear with me a moment. I'm just going to pull this up so we can talk about it real briefly here. So Apple year to date, it's down about 19.6%. Google is down about 37%. Meta down 71.8% this year, which translates to about $700 billion wiped off of their valuation. $700 billion wiped off their valuation this year by this major sell-off. Microsoft down about 34.1%. Again, they had a big earnings miss yesterday. Actually wasn't too bad. They actually beat top and bottom line estimates, but they had a more of a bleak outlook. And again, you got to remember, a lot of these CEOs, when they get on these earnings calls every quarter, or the finance director, whoever may be delivering those numbers in the call, they tend to underplay things, especially in times of volatility and times of economic stress. They're going to undershoot and underestimate, right? It's the whole thing of under promise and over deliver. It's all a game, just in terms of trying to not manipulate the market price, but basically when they set a low bar and then they exceed those expectations, it's like, whoa, look at them. They've exceeded those expectations. They're the best company out there. Now, I'm not saying Microsoft's a bad company. In my opinion, it's one of my favorite companies out there, if not my favorite, just with the relative price point, growth potential. It's a dividend grower as well, which is kind of our bread and butter here. We love the dividend growers. This is paying a little bit of a dividend at this point, and really healthy earnings and dividend and cash flow as well. So yes, they have more of a bleak outlook just for the next few quarters as we kind of ride out this recession here. But needless to say, they've still got plenty of cash on hand, still moving forward. Again, cutting some jobs, possibly, potentially, or some more jobs at this point. But that was the reason for the big sell-off for Google and Microsoft yesterday, 7% and 6% respectively. Markets for the year, just a quick roundup. As of today's market close Thursday, October 27th, Dow's down about 12%, S&P down about 20%, NASDAQ still down about 31.4%, and the Russell 2000 down about 19.8%. But anyway, that is your closing bell for the week. If you have any questions, feel free to comment, call us, email us, text us, come into the office. We're here right by John Wayne Airport in Newport Beach. We'd be happy to see you and have a cup of coffee and chat things through. All right. My name is Jason Jacoby. This is your closing bell. Have a good one.